Good afternoon and welcome to ALPARI UK's afternoon market update. My name is James Hughes, Chief Market Analyst at ALPARI. Looking at the major stories moving the markets today, and it's a little bit of a change because we're not talking about the Eurozone for the first time in a long time. Now, of course, there are some Eurozone stories, but the major ones have come from the US today. And of course, this week has been really dominated by what's gone on over the pond, and we've seen GDP numbers out of the US showing that the economy wasn't necessarily recovering and wasn't the shining light that we all thought it was. And today we've had those key non-farm payroll numbers, the jobs report out of the US, and yet again they have disappointed for the third month in a row. They're actually now, the unemployment rate actually jumped from 8.1% to 8.2%, and there was the slowest growth in jobs since May 2011. So there has been a lot of negativity surrounding those jobs reports. Of course, unemployment is the #1 barometer of economic recovery. So the same thing goes for the Eurozone. We've had some pretty high Eurozone unemployment numbers today as well, 11.1% for the Eurozone. Again, showing that Euro area, as we know, is in dire straits still. But looking towards the US, for a long time, a lot of people had thought that the US was almost the shining light of what was going on around the world. You have the Eurozone issues, but the US has managed to almost push those to one side and continue with its own economic recovery. Now, from being the shining light, it seems that light is actually dimming out now because the growth numbers were nowhere near what we thought they were, and the unemployment numbers have come in a lot worse than expected as well. And of course, what that's done is seen markets fluctuate and pretty much fall off the end of a cliff today. We've seen the Dow's down around 160 odd points on the back of that news. We've also got the rest of Europe being dragged down by that. So there's a negativity just reverberating around what's going on at the moment. What we've also got at the moment, and really going back into last month, was that May was the worst the worst month for financial markets or for the major indices since May 2009. So again, a long time we haven't seen anywhere near as much negativity as we have over this last month. A lot of the major indices down around 7% or so. So there's some real big numbers there that are really showing that these markets have been struggling. And of course, the major issue is because of the Eurozone. Now, we got away from the Eurozone for a couple of minutes, but not for that long, of course. There's been some more numbers today, some more scaremongering by a couple of big officials saying that the Eurozone is on its last legs, and just all this uncertainty and comment over the Eurozone doesn't necessarily help these markets at all. We all know that there's negativity there, but one figure that's come out today is saying that there's been 100 billion euros worth of cash withdrawn from Spanish banks by the Spanish electorate since the start of the year. Now that comes even before we've had this recent banking crisis, with Bankia asking for another 19 billion euros in terms of bailout money. So huge numbers of money being withdrawn. What people are now calling for is for a guarantee on this money. But of course that becomes increasingly hard when you've got a lot of these banks who need bailouts. How can they then go and guarantee the funds that are in there? So huge issues in terms of the Spanish banking system, and that's been the biggest worry for us through a lot of this week, has been the contagion fears and these banking issues pushing these bond yields close to that 7% level again. We've also got a bit of negativity coming from the rest of the world this time. China earlier in the week came out saying they weren't going to add any more stimulus to their economy. That spooked the market a little bit. But then we've had poor manufacturing numbers out of China over the last couple of days, which yet again have dragged on things. And yesterday, a lot of people looked towards these BRICS countries, so Brazil, Russia, India. Now, India yesterday came out with their GDP numbers almost 2% lower than what we expected them to come out as. So terrible numbers out of India. And those countries who are supposed to be guiding the rest of the world out of this sort of recession look like they're being hit by it as well. So there's so much negativity. You can see why we've had such a poor May. Now, what people will be hoping is that over over June and through the summer that things pick up. But what you tend to get through the summer is that lack of volume again, because people go away on holidays. The markets tend to be that little bit quieter. So maybe we're not going to get that positivity. And of course, when we look to June 17th, that date we've been talking about for a long time, we look at Greece and the election that's coming up, and the possibility that we could even see Greece come out of the Eurozone before the end of July. So, I mean, there are such big issues going on at the moment. There's no surprise that there's so much negativity. Now, we've got the long weekend in the UK, so we won't be back until Wednesday. Hopefully the markets maybe have sorted something out by then. A couple of days off may be exactly what it needs to bring ourselves back into line, but I wouldn't necessarily hold our breaths about that. Thank you very much for listening. My name's James Hughes, Chief Market Analyst at ALPARI UK.